Hello, everybody. This is Fred Stewart with Stewart Group Realty. Today, I'm delighted to bring to you another very, very good mortgage broker, mortgage professional, Jerry Wilson. Jerry Wilson of the Jerry Wilson Group over at Finance America. He's located out in Lake Oswego at 6000 Meadows Road. Hello, Jerry. How you doing?
I'm doing good, Fred. How are you?
Doing very, very, very well.
Great.
Jerry, I got to tell you, I really appreciate you taking the time to spend with me and who knows how many thousands and thousands of our friends out there to do a little bit of just talking about real estate. Well, talking about mortgages with you. Guys, Jerry has been in the business how many years?
It'll be 25 years in September, Fred.
Now think about that, guys. 25 years. In the last 25 years, this market has gone through so many ups and downs. I mean, Jerry, you've probably done every type of loan that there is to do.
Well, I guess career to date, I should say, Fred, over 2,800 loans for just under $800 million.
Wow. Think about that, guys. 2,800 loans. $800 million in volume. You know, when I first started in real estate in 1988, the largest real estate company in Portland, which of course is the largest real estate company at the time in Oregon, did not fund or did not close $800 million in transactions. So it shows you in the last 30 years how much our market out here has grown. It's grown a lot.
Sure has.
That's why it's very important that you work with good people. Jerry, the reason why we're out here today is I want to talk with you about something I hear a lot about from people. They're interested in buying investment properties. Sometimes they're looking at buying investment properties because, you know, they want to become landlords. And sometimes they're looking at something to where they can buy a home for their younger children to live in while they're going to college, either here in Oregon or in other markets. So I want to talk about a couple of those things today. And, you know, get your input because, you know, I'm sure you've been there. I feel you've helped a lot of people.
I've worked with a lot of investors and been an investor and still am an investor myself. So
Really? So you buy real estate
Yes.
and stuff?
Absolutely. I've got 4 rentals right now. At the height of my career, I had 21 rentals. So, but I'm getting back into the market, and I think the Portland metropolitan area has got some great upside for investors and rental owners as well.
Wow. Now, what's the first thing a person should do if they're thinking about, let's say in the next 12 to 18 months, buying a rental property? What's the first step they should do in the direction of financing?
Great question, Fred. The first step they should do is have a long-term investment strategy. I've always been a fan of being a long-term property owner. In this market being as hot as it's been for a long time, there's a lot of people that are trying to get in the market quickly and exiting the market quickly, and that's generally not my philosophy. So the first question I ask when I get a call is, what is your long-term objective or strategy?
Now, when you say long-term objective or strategy, of course you're talking about keeping the property a long period of time. How does this affect the financing decisions? So you're looking for a long-term relationship for a long-term loan over a short-term loan. What's the first big difference between those two directions?
So, and let me clarify, when I say long-term strategy, I think as a property owner, if you're buying investment property, you should think a minimum of 5 to 7 years of owning that property. And by doing that, that will allow you to take your cash that you have set aside for your down payment, and based off current market data, we can kind of come up with some type of cash-on-cash return over that 5 to 7 years, and by determining that cash-on-cash return will help kind of make the decision on what kind of loan would be best for it based off that kind of strategy.
Okay, so what is a typical down payment for an investment property are you looking at these days?
A minimum of 20% down. We do have some 10% down product as well, but it's not priced as well and it's not quite as competitive. If you have 20% down, you're going to get a good long-term financing product available.
Now, what's the difference between a 20% down payment and a 10% down payment when it comes to rate?
With rate, you're looking about 3/4 of a point rate difference between 10 and 20% down, but more importantly, with less than 20% down, you're going to have that mortgage insurance premium in the payment as well. So that will bump your payment on the average about $200 to $300 a month, and that will affect your cash-on-cash return.
Now, why would somebody choose a 10% down product over a 20% when you're looking at higher interest rate? But what's the interest rate now for the difference?
It's right around, on a 30-year fix, it's right around between 5% and 5.25% on a 30-year fix.
Wow, so that could be as much as 6% down on a 10% down?
Correct.
Wow.
And the reason why some people like to do 10% down is that they can leverage their money and buy 2 properties with the same amount of money as a 20% down. So if they only have X amount of dollars available, sometimes they're trying to leverage that money. I think it's a little more risky strategy to do it that way, but it still can be done.
And then they, of course, have the mortgage insurance, which everybody hates. At least I know I hate it.
And which is not tax deductible if you have a certain household income. So there's there's some other tax strategies involved with mortgage insurance premium as well.
Now, so you meet with somebody, and let's say for the discussion, we're going 20% down. Okay, what is the other issues you got to look for when you're looking to buying a property, or say an investment property, over buying a second home, over buying a single family? What's specifically different when you're looking at for an investment property?
So the changes, when I say changes recently in the last 18 months, not only for the rental property that you're buying, but also your primary residence, after your down payment and closing costs, the lender is going to want to see you have 6 months worth of cash reserve for each property. So a basic math is, if your rental property is $2,000 a month payment, after your down payment closing costs, you have to have an additional $12,000 in liquid reserves, plus another 6 months worth of PITI for your primary residence. So that has been the biggest change over the last 18 months.
So they're really only looking for, working with people who are very solid financially.
Absolutely, with cash reserves.
With cash reserves.
So not only credit, not only income, not only good rental rates, but they want to know, in case if that renter cannot make their payment, there's a certain amount of cash reserves to service the
Or
debt.
destroys the property.
Or destroys the property as well.
Yep. Hey, what are we looking at? Can the borrower, can you consider 401k and IRAs and other liquefiable assets like that as reserves, or does this have to be cold, hard cash?
No, you can tap into other, whether your equities and stocks, your 401k or retirement, that is allowable. It just depends on the retirement plan. Some retirement plans say only for primary residence, some of them say to purchase a home. So it just depends on what your retirement plan is. So that's part of my initial consultation, is find out where the source of funds are coming from and figuring out if they're qualified funds for down payment for investment property.
Are there second mortgage products out there for people who've got, like, say, a lot of equity in their home? Can they pull a second mortgage out and do that?
Absolutely, and I'm a big fan of that, of some type of home equity line of credit to tap in some equity so you can purchase an investment property. And the reason why I like that so well, Fred, is once we have that line of credit in place, a lot of times you don't have a payment on that line of credit until you draw on those funds. So depending on what kind of area that we strategize towards on it, or depending on the market, how competitive it is, it might take us 1 month, it might take us 3 or 6 months to find the right investment property. Well, with that line of credit, you're not making payments on it until you draw on it at closing. So I like the line of credit as a vehicle to tap into your primary resident equity and leverage it into an investment property.
Now, will the lender, say you got a lot of credit line, I don't know what the credit line limits are anymore, but
Right.
Let's say you got a lot of credit line. Will the lender consider that credit line as part of the reserves for the loan?
No, it will not be part of the reserves. So the reserves has to be liquid cash, stocks, equities, any type of money market account, something that you can withdraw immediately on, but not a line of credit.
Now, if a borrower wants to buy the property, let's say with a best friend, or with a parent, or with a sibling, a family member, do you suggest they do it as a corporation or an LLC? I mean, what are you seeing people do these days?
It's a great question, Fred. So all lenders industry-wide are only going to loan to you individually, and after you close the loan, then you have the ability to transfer it into an LLC or corporation. I generally like LLCs, especially if you're going to have other partners in it, and the reason being, you just pass those all the write-offs through a form called a K1, which is an extension of that LLC agreement. And so I always would put my properties in some type of LLC or some type of corporate entity to protect yourself against liability.
No, Jerry, as a real estate person, I agree with you 100%. That's why I always advise people, as they're sitting down with their mortgage professional, as they're sitting down with their real estate broker, they should also have an attorney around or a CPA around that can also advise them on how to set up these different entities like a corporation. Some people even do trusts. Absolutely. A trust or an LLC. And it sounds really hokey dokey, everybody, but I do believe it. You got to put together a small team around you when you're doing stuff like this so that you're constantly able to get the information and lean on the experiences that you need to be able to make proper decisions. Okay, the big thing I get from a lot of people, Jerry, about the fear of buying an investment property is the complications of down payment, which we've already covered. But say somebody's doing it in a partnership. Does the fact that, let's say, one person puts in more money than the other, how do you look at partnerships when they come down and sit down with you as far as qualifying them as borrowers? Do you look at them individually? Do you look at them as a group? What's the direction?
Well, we're going to do both. So, and I always say real estate is negotiable. So if you decide you're going to bring on a partner, and let's say the down payment is not going to be 50-50, then a lot of times you will negotiate the ownership interest based off the down payment that each partner is going to put in. But just for an example, if one partner puts in 70% and the other one puts in 30%, you don't have to go on title or ownership of the property 70-30. That can still be negotiated. And the reason why I say that, you might have one partner that is real strong from a liquid cash standpoint, but maybe from a credit standpoint or an income standpoint, they might not be strong as the other partner. So again, having a plan and a strategy prior to purchasing or negotiating always makes it better, and that's just part of my initial consultation.
Great. Jerry, I want to thank you for the time you've spent with us today. I hope this is not the last time we get to see you.
No, Fred, we're just getting started. So
I really encourage you all that are interested in buying investment properties to at least call Jerry up and run things by him. What a lot of people don't understand is people in our industry, both the mortgage and the real estate industry, and I'm sure other industries too, but for sure in this industry, we talked to a lot of people about opportunities and things to do. We talk things out. And sometimes there's a deal there, sometimes there isn't. But you shouldn't be afraid to sit down with somebody with a lot of experience and just talk it out. And you never know, you may learn a different way to skin the cat, as they say. And I encourage you to do that with somebody like Jerry Wilson over here at Finance America, because he's been in for 25 years, he's ridden the roller coasters, he has probably seen what you're trying to do, and probably seen it more than once. Jerry, what is your phone number?
My phone number is 503-312-3332.
And what is your email address?
My email address is the letter J, then Wilson, the symbol at financeofamerica.com. And again, that's jwilson@financeofamerica.com.
Jerry, thank you very much. And friends and family, thank you for paying attention to this video. I look forward to working with you in the future. Bye-bye.